2022, we paid 1.1 trillion shillings, basically 1.2 trillion shillings. And the driver, that jump was actually informed by the midterm benefits. Some of you who remember that time. We paid 23,000 members in 2021. In 21-22, we paid 47,000 members. By the end of last year, we had paid another 1.2 trillion shillings to our members, and the number was slightly over 46,000 members that we paid during that period of time. And we're really proud of that because that shows that while we exist for the member, we actually keep that promise that will deliver to them the value that they need, that they've done that. If you look at for this, we're a bit behind on this strategic objective, but we think we'll achieve that once we have the stabilization working, and also once these data sets that we're waiting, expecting to, if every Ugandan can report a birth, can report a death correctly, it will help us process this much further, because then we don't need to go visit a grave to confirm that the member is no longer here with us. Customer satisfaction, we live by you guys now. I want to take a look at this. Our target's 95% by 2025. We hovered in 2021 at 86%. It held steady during the hearings. We did this survey in May 2023, and we're shocked that the customer satisfaction held steady during this time of crisis. Now, if you correlate this graph to your contributions, you can actually see the two actually talking to each other, that members trusted enough with more of their money, and they were actually okay with the level of services we're giving them. And that I'm really grateful to our members, because it shows that actually, regardless what noise there was, we actually held course and were able to deliver to the fund. Now, this is where we had a little bit of problem. We had a 93% in staff satisfaction. Guess what? And by the end of the year, this year, it had dropped to 86%. When you have a hearing and you have that intense level of scrutiny, and they're calling your staff to the IGG's office, to the Auditor General, you're being slammed in Parliament, it is going to impact you. So we had our staff going through, they felt it more than even our members, and you see our staff satisfaction dipped to 86%. By then, let me tell you, globally, any company that gets 75% is happy. But with us, we can track and realize that, okay, there was a problem here that we need to deal with. And because we realize that there are things we are doing with our staff so that they can actually serve you even better than they did the previous year. So we are confident that given the continuity and stability going forward, we are going to be able to reach and meet these challenges. So, the interest rate promise. I know many of you are here. You've called, you've asked, so man, how much are you going to declare as interest? We made a commitment to our members that we would pay 2 percentage points above 10-year average inflation. We have been very consistent in delivering that promise. Unfortunately, the prerogative to announce an interest rate lies with the Minister of Finance. And what we know, he's going to do that on Tuesday during the annual members meeting. But given the background I've given you, you can see the challenging environment. But still, even the resilience of how we perform, we believe that we still will be able to keep the promise we've made to our members in that regard. So at the end of the day, you want a strong fund. You want this fund to be stronger tomorrow than it is today. Why? Because tomorrow, that's when you are going to be eligible. You don't want a fund that's weaker tomorrow when you're just ready to get your money. So we've created a new vision, and Barbara talked about it, 2035, which is the bedrock of our long-term strategy. That we want to move the fund from our 2025 target of 20 trillion shillings to 50 trillion shillings. Now, gentlemen and ladies, that is audacious. Let me put it to you in a certain context. By the end of 2025, the fund will be 40 years old. Actually, 45 years old. 85 minus 25, 40 years old. okay? In 40 years, the fund would have gone from 0 to 20 trillion. What we are saying is that we are audacious enough to think that over the 10 years, from 2025 to 2035, 10 years, we'll move it by another 30 trillion shillings. We have the strategies for that. It's so audacious, and some people get scared, say, no, we can't do that. No, we can do it, and we'll do it. And we're going to do that because of a couple of things. We can't say as a fund that our purpose is to make lives better for Ugandans when it's only 10% of the working population we cover. So we're going to dial up that number. By 2035, we want to cover 50% of Ugandans. And that means we move out of the formal sector into the informal sector, into agriculture. How do we get those members? How do we get those farmers to save the fund? And what you are going to see really undergirding our strategy is what you call the sustainability agenda. We'll not leave a Ugandan behind. If they are willing to save, because we'll be providing them with the capacity to save, we'll make saving fun, saving our life. We're not going to wait for the economy to create jobs before we recruit a member. We're going to be part of that process that creates jobs. We're not going to wait for a farmer to make more money before he becomes a member. We'll be part of the process of ensuring that the farmer makes more money. And when we do that, we make this fund for the ordinary Ugandan. In addition to the investments we make, we then get, and Ugandan gets to enjoy the benefit that you and I are doing that. And over the next few years, next few months, as we lay it out for Ugandans, we hope you, the media, will actually take the time to analyze, discuss, so that we can inform Ugandans that we are ready to make this fund one of the biggest assets this country has ever seen. And I'll tell you why we even have to do that. Because, and you guys will hear me say this over and over, if you look at countries like South Korea, Malaysia, Singapore, Taiwan, China, and of latest, Vietnam, they became Asian tigers when their domestic long-term savings hit at least 25 to 30% of GDP. It means they could fund their development agenda locally. They didn't have to borrow 100%. Uganda today, our long-term savings is only 11% of GDP. Now, guys, no wonder when the World Bank says we are not going to fund you anymore, we all panic, because we are relying on our external parties to help us in that process. But if we can grow our own domestic long-term savings, we'll then begin to address some of our development needs in this country without jeopardizing the safety of the fund. So by 2025, we're going to do all this because the 95% engagement for customers, we'll do it keeping the service levels that you've come to expect of us as we do that. On that note, thank you. We'll take the questions as they come. Now, most of the questions I'll ask both Barbara, Gerald, and Stevens to come. They will answer the harder questions. Me, I'll do the simpler questions in that process. Thank you. Barbara, over to you.
Wow. Thank you so much, Patrick. I think that's the point at which we are supposed to, give him a hand clap. Thank you so much. As we set up for the question and answer session, I want to know how many members are in the house. Sorry. I hope you're all members. I do hope you're all members. Dennis, you're serving with NSSF. Yeah, so I think stepping in the members' shoes, we have confidence that the fund is resilient. Your fund is very resilient. You've heard about the operating environment. Reduction of interest rates, appreciation of the Uganda shilling, reduction in value across the stock markets, and the last one, which was implied, intense scrutiny from regulators. These are the things that have really played a key role in the performance of the fund during the last financial year. So the single takeout for me from looking at the numbers is that your fund is very resilient. And thanks to you, our members, for the renewed confidence, for the trust in the fund, for continuing to save and trusting the fund. And that is something that we really honor. So we have our panel lined up. You can just put up your hand, ask the question. There's a microphone that is going to be moving around. Okay, thank you, Sharon, for volunteering to help with that process. I see a hand up, but I can't see the person. Is that Paul? Okay. All right. So we'll take, as soon as you have the microphone, kindly just say your name, media house, and then state your question. We'll take 3 questions, and then answer those, and then in that sequence. Thank you.
Paul Busharizi, New Vision. I'm looking into the future. You say you'd have grown from 20 trillion to 50 trillion over the next 10 years, or from 2025 to 2035. That assumes an average growth of about 10%, or 9.6% compounded over the period. Some people would argue that you're just rolling on momentum. People are becoming more compliant, they are giving you more money. Is it that? Can you convince us that, you know, some acumen, the acumen of investment is more than just accumulated funds? And then, no, I think I'll stop there. Thank you.
Thank you very much. My name is Patrick Kamara. I wanted to know whether it's of your concern that now Kenya is undergoing some kind of economic turbulence, and you seem to have invested quite substantial amounts of money in the Kenyan economy. And what is your concern there, and what do you see in future if Kenya continues to stumble? Now you see the Kenyan shilling is not doing well if you compare it with the Ugandan shilling. Thank you.
Okay. Let's have another question. Yes, Joram? Yes, please.
Thank you very much. My name is Buembo. Actually, I'm speaking for the minority. That is the workers of yesterday who have continued to save voluntarily. Now, today we are bombarded, interestingly, by banks where we are customers. I think DFCU is saying, hey, come, 11% here. Standard Chartered is talking of 12%. So I'm wondering, is our fund here able to be flexible enough and introduce the different rates for voluntary savers than those who are obligated to save, since voluntary savers have a choice?
Okay. Sam Setumba from Nation Media. The question of compliance at almost a half, 57, I think. Is it a question of the law? Is it companies not thriving? Is it companies closing? What's the real issue that is keeping compliance down there? And finally, if you can update us on the equities performance in Kenya, how did we fare in terms of equities in Kenya, and what's the size of your holding in Safaricom?
Okay, thank you so much for the questions. I think we'll
Barbara, just one more question, please.
Okay.
Thank you. I'm Vincent Kasozi from Sanyo FM. I'm going to start off with the last point that Patrick made regarding the Asian tigers who are able to propel development by accumulated savings, which you said was minimum at the best is 25%. Uganda's case, you said, is 11% of GDP. Does this just include NSSF only? Could you break it down for us, and what is NSSF's contribution here? We know it's huge, but we'd like to know exactly what it is. And when I rope in your strategy for 2035, where you're looking at 50 trillion, the big 50, the big number. Now, project our GDP then and tell us what you expect accumulated savings in the country to be as a percentage of GDP.
Okay, thank you so much for the questions. We are just taking the first round of questions. We'll take another second round after these responses. So let me now allow, yes.
So I'll ask my colleague Gerard to answer Patrick Imara's question on the Kenya shilling. I will also ask Ms. CFO, I know it's not your area, but you're familiar with area compliance, so we can deal with that. And I think you'll also deal with the equity position in Kenya. We'll start with that. Okay, Paul raised a question of growing to 50 trillion. Are we just riding on momentum? The question is, no. If you look at the strategy that we have, it basically increases coverage from the formal into the informal sector. So, whereas there's momentum you're riding on, you actually have to have new initiatives to take you there. Because it's audacious. If we said we hit 20 trillion by the end of next year, we're going to need to grow by about 2.7, 2.8 trillion shillings a year to come to 50 trillion by that time. So no, there are new initiatives, and that's why we talk about this passion about how do we create a willingness to save and also create the capacity to save. So there are new initiatives around that. The question you raised, I think Mr. John Buembo, you're being bombarded with 11%, 12% from Stand Chart. Is that going to be flexible? Actually, the truth of the matter is we've not even rolled out the voluntary program yet. Mr. Buembo, you know that when you come in voluntarily, normally it becomes mandatory. The good news is that's going to change. And once we'll be as competitive, if not better, than what you're going to find in the marketplace for the same type of product you have on a voluntary basis. That's coming out soon. The delay was we needed to come up with the regulations that would be approved by the powers that be. The draft regulations are done, so that should not be too much of a concern for you. We should be fine. And finally, on my side, Vincent raised the question of 25% GDP from 11%. The first question is how much of is that NSSF? Right about 98% is NSSF. Long-term domestic savings. NSSF holds about 98% of the country's savings today. Now, if we say at 50 trillion, what's the percentage of that? That number comes around 23%, but we hope that also then the other long-term domestic savings comes and collectively we will reach that magic 25% in the process. Thank you.
Thank you so much, Patrick. Let me respond to Patrick Kamara's question. I think you're right. We have quite a sizable amount of investment on the Kenyan side. But I think we need to understand why the decision to go in Kenya made sense in the first place. We know we have the Uganda Securities Exchange. Until 2011, the fund, 98%, almost 99% was invested in Uganda. But then when the new law came, the one of OBRA, it allowed schemes to actually invest within the East African region. So the fund took a conscious decision to take advantage of the diversification opportunities within the region. Kenya was a natural option, or the reasonable option for several reasons. The Kenyan economy is bigger than the Ugandan economy, so it's almost twice the size of the Ugandan economy. The Nairobi Stock Exchange had been around since the 1960s compared to the Uganda Stock Exchange, which only came into existence in the year 2000.
You have over 70 or 80 companies listed in Kenya, compared to less than 20 companies listed on the Uganda Securities Exchange. You have companies like Safaricom, Equity Bank, KCB. To give you context, KCB or Equity Bank are twice the size of NSSF in market capitalization. So basically, it made sense for the fund to get into Kenya. But it's not that we needed to be there aggressively. So we managed our participation in Kenya by the extent to which we allocate investments in Kenya. So basically what happened last year, Kenya went through some bit of turmoil. We know things began going badly since COVID came. When COVID came in 2020, all economies took a hit. Kenya wasn't an exception. Uganda also had its own issues. But then aside of COVID, last year, at the beginning of last year, we had the Russia-Ukraine conflict, which compounded the issues that had actually started from COVID. Now, Kenya is unique in East Africa in the sense that it has borrowed money from the international markets. They call them Eurobonds. When you're a country and you're borrowing on the international markets in a currency which is not your own, it's a Eurobond. So when you look at the East African countries, it's only Kenya that has a Eurobond. Now, when the Russia-Ukraine conflict came, and the interventions that the developed world put in place to kind of protect the economies from crashing, it meant that inflation in the Western world had to get to levels that had not been seen since the 1980s. When we talk about inflation in Uganda, it's not a problem in those economies because their target is 2%, ours is 5%. But basically what we saw at the beginning of this financial year in July, you saw inflation in the Western world almost approaching 10%. So what happened is that the central banks in those countries reacted aggressively to kind of combat inflation. They raised rates. Now, when the Fed raises its rates, it means that the dollar is going to become expensive. So the dollar is going to appreciate against other currencies. And usually because our markets are also, they also have foreign investors participating, when the dollar strengthens against local currencies, there tends to be a capital flight by portfolio investors, repositioning their portfolios to safer assets, and that is what happened. But it has implications for us because when investors are leaving the market, we see a lot of volatility. So essentially, what happened last year, while that one was happening, the Kenya shilling weakened the most. In fact, because Kenya has a Eurobond, the yield on the Kenya Eurobond almost touched 20%. Now, it meant that the country could not support the currency at the time when the dollar was strengthening, so it ran out of reserves. What it meant was that there was a lot of volatility on the stock market to the extent that we saw the Kenya shilling, weakening by 22%. The stock market as a whole came down by 14% on the Kenyan side. But for us, because we report our financial results in terms of Uganda shilling, the other effect or the other adverse effect was the weakening of the Kenya shilling or the strengthening of the Uganda shilling compared to Kenya, which compounded our situation. But the reality is that Kenya still remains a very good investment destination because, like I said at the beginning, it has the largest economy, largest stock market. It has been growing just like us within the region of 4-5%. It is a more diversified economy. When you look at some of the companies listed on the stock exchange, like the banks, they have returns on equity in excess of 20%. You look at a company like Safaricom, return on invested capital, more than 35% or 30%. These are good companies to have. Can they recover? We believe so. And that is why we do not see a reason for concern. What happened last year was just a once in a while kind of event which led to what we saw. Actually, what I didn't say is that in addition to the things which are happening externally, Kenya also experienced the largest drought that particular year, and actually we saw agriculture suffer. So for the first time in a long while, Uganda had a trade surplus compared to Uganda because they had to import food from Uganda. So I think I've kind of exhausted the Kenya situation. So regarding the second question, our stake in Safaricom, we have about 1%, and I think we are the single largest institutional investor holding Safaricom at about 1%. But like I said, Safaricom is a giant. It's almost twice the size of the fund. So that 1%, actually, maybe to give you context, the share price of Safaricom year on year declined from 32% last year, and we closed at about 16%. So that hit of Safaricom alone actually had an impact on our performance. Thank you.
All right. Thank you, Gerard. The issue about compliance, why we are at 57 and not higher. We need to start by putting this into context. Our definition of compliance is those companies which pay at the right time, in the right amounts. And that's where the problem begins. Because quite a number of times we get companies that pay and they do not pay for everybody because probably some of them have just become new employees, are not yet registered. But in our books, you are not compliant. Not that you are not paying. That's one aspect. The second aspect also have to look at is that we have quite a number of players, companies which are small, basically family owned. And these ones naturally have governance issues. And they take a little bit more time for you to get them on board because no matter, as you know, in these companies, and quite a number of you own some, the board meeting takes place on the breakfast table or in the bedroom or whatever. So the decisions you make, normally, the employees do not have a very big impact. On the other side, if you look at the companies, corporate, like big corporates, their compliance rates are very big. If you look at the papers you work for, the media houses, the communication companies, the financial institutions, those ones, their compliance is always over 95, 97%. But we are looking at average across the country, and we have got quite a number of companies which are smaller and have governance issues. But all is not lost because if we compare to ourselves to other institutions which are grappling with compliance issues, we are doing much better. And as Patrick has told you, we have a strategy and plan where we are planning to comprehensively grow this compliance rate to over 70% in a short while. Thank you.
Okay, thank you so much for that first set of questions. Can we take now the second set of questions?
My name is Muhereza Chamtetera. I work for CEO East Africa Magazine. And first of all, I haven't had the opportunity to congratulate both Patrick and Gerard upon assuming this position. At least I'm happy there is some good amount of continuity in the fund, so I wouldn't be surprised about the performance. And I'm also happy that it's come out that it's about time the fund played a strategic role in the growth of our economy, because especially if you look at the external pressures, it's come to a time when most countries are minding their own business. The offshore investors are pulling back home. And for me, and I've always argued that I still find it strange that we are taking our own savings to go and save, the Kenyan economies and the Tanzanian economies. Yes, in the short term, it's good to chase the interest rate and everything else. But if you look at what was happening in the newspapers last week, about 2 or 3 companies had gone bust and the banks are selling them. My question is, shouldn't NSSF be playing a more strategic role, even as difficult as it is? Because I believe there is a lot of companies in Uganda, especially the homegrown companies, who only need just about 1 billion shillings to sort a few issues with their banks and maybe NSSF areas and a few creditors. And then these companies, in about 2-3 years, with good management, they can be brought, and NSSF can exit through the exchange or something. So I would be more interested to hear about how we need to use our savings in a more strategic manner. And I believe it's the same issue which came out, you remember the issues of the Grain Council and all that? It's something that I think, to me, it's something that should be more pursued, because as Paul said, the issue of buying these mature companies, Safaricom and everything, it's very nice, but I think as a saver, we need to be looking at how do we save our own companies and grow more strategically. I would love to hear more about that.
Thank you.
Yeah, Samuel Sanya. I run the New Age Publishers. What Charm has just been saying, I have a question for the MD. I know that NSSF has just gone through some changes, but I worry whether you're structured to actually pursue some of the plans that you have. You mentioned sustainability, which of course is a big concern. And NSSF has always had this intention to go into the informal sector to kind of grow numbers. You want to cover 50% of Ugandans, which we very much welcome. But are you structured to really harness these? I find that NSSF is, you have the biggest mass of CFAs in Uganda, which is a good thing, but you seem more prepared for the formal sector. You're more ready to take on those companies with good corporate governance. It's an area where you have tried to grow. You've done some innovation competitions. You have given some seed money in the past. That's cooled down. I don't know how that's doing. But I know for a fact that there are some contributions that don't have names to them. You had about, was it 50 billion that was unclaimed or unallocated that came from tea growers? So I heard you had some contributions from those kinds of people that you find in the informal sector. So when you say you want to grow your numbers there, interestingly, you had the picture of a tea grower who is one of those people whose money you have, but actually can't allocate to them because you don't have their details. Can you give me comfort as a member that you have made some changes to your playbook to be able to actually grow those numbers and not compound the problem that you already have, where you have monies contributed, but then you can't actually trace who the owners are? Maybe because they're undocumented, or there are very many issues in the informal sector, which right now I don't have the comfort that you have the partnerships or the setup to actually explore and really meet these growth projections that you have. So for me, it's just a wish, but not really something you're actioning. Thank you very much.
Thank you, Sam.
Thank you very much. My name is Moses Molondo from Vision Group. I have just 2 brief questions. The first one, during the parliamentary probe on NSSF, there were some shocking revelations on the misuse of funds within NSSF in form of exorbitant bonuses, in form of irregular recruitments, travels abroad, and so many other things. You need to give assurance to the public now that there is a new management, especially from Mr. Ayota, the new MD. The public, especially the members of NSSF, need assurance that you are undertaking some reforms internally for prudent management of the funds of the members to avoid a reoccurrence of such scenarios? And lastly, there are so many people who are benefiting from the mid-term access. You're paying hundreds of billions of money, and this money can have a very big ripple effect on the economy if these beneficiaries are well guided. I would like to know whether you have any plans, any initiatives to offer investment guidance to the beneficiaries of mid-term access so that they don't squander their savings, so that they are well guided to properly invest that money. Thank you very much.
Thank you. Let's take two more.
Hello, good morning. My name is Ali Toha and I work with New Vision. Just two quick questions. Looking at equities, 12.51% allocation in terms of the whole portfolio. In 2021, we had NSSF put $100 million in the IPO that we had at the time. I'm aware that your valuations are complete. It's not a question whether you're going in or not, but the valuations are complete. So I'm looking at it in terms of, but by what margin do we see this allocation in equity grow as we go into the new IPO that in October that's coming up? So I think you'll give us a few insights in that regard. The other is on, I think we should give an update on the operations at Uganda Clays. Over the last 3 years, there have been several changes in terms of management, but also in form of the general operations. In terms of, are you happy with what's going on given all that you've done since NSSF has a huge stake in the company? Thank you.
Okay, thank you for your question. Can we take those? Okay. All right.
To what extent is the geographical limitation of where NSSF should invest its funds affecting its earnings? And is there a likelihood that this legal limitation, is there a likelihood that there would be a lobby against this limitation restricting where the fund can invest? Thank you.
Thank you. Yes. And there was another hand at the front, I think, yes. Daniel also. Yes.
Okay. Good. Thank you. I'm called Musings Branche, and I work for the Africa Report magazine. Mr. MD, my question is a bit related to what Chamtetera asked. What's going to be the role of NSSF in the growth of this economy or the development of this country? This is a question that may have perhaps popped up on your desk or the desk of the fund. Is people want to see you investing beyond in the real estate. People want to see you investing in the construction of the national infrastructure. We have seen that with the Provident Fund in Tanzania. They have invested in construction of roads. They are in charge of collecting toll fee. So if government comes to NSSF 2-3 years from now and says, give us 500 billion, give us 1 trillion shillings to invest in construction of a toll road or ETC, what's going to be your response, or what's your? I hope you already have a mid-term position on this question, and what is that position that you have at the fund? Thank you.
Let's take one more question, and then we'll answer this set and then proceed to the next.
Okay. My name is Charles Boji from Money and Markets. My first question is on the level of engagement with different stakeholders to develop investment vehicles that can see the funds mobilized by NSSF more absorbed locally. Again, to just cascade and build up the question that I think Cham put up. For instance, are we seeing engagement with the Capital Markets Authority to see that we have more of these investment vehicles for more fund absorption within the country? Then two, it's on the long-term fund that NSSF is actually in possession of. Because we know that the constant concern that a number of business people raise is the cost of money for doing business. And we know you're the most liquid entity in the country, and the good thing is that you hold good money in the sense of it being long-term financing. Do we see you really freeing this money and releasing it to the business community, that badly needs it? Again, I wanted to add something to the question that Morondo asked. There are quite a number of your beneficiaries that pick this money, the NSSF money, and I know, Mr. MD, we've had these discussions before of how most of these actually end up squandering this money. So beyond those that received midterm access, what plans do you have for those, that are actually retiring and getting these packages? Because many of them seem to feel that, after receiving their contributions, you totally, cut them off to the world to go and figure it out. Do we have any plans, especially, Mr. MD, in your new administration, to see that something is done? Because I believe it can also be good in helping others mobilize or come on board voluntarily. And lastly, if you can share just a digest of your plans, what do we expect from you? What do we expect, from the new management that is different from what has been? Thanks.
Thank you so much. Let's take that next set of questions. I really like the energy in the room. I see so many hands up. But let's take this set, and then we will take those questions in the next round. Thank you.
Thank you. I think I'll request Mr. Kasato to answer the one relating to Uganda clays, the one relating to equities in terms of the allocations, the one relating to, let's see, the role of NSF. Okay, and then the Africa report, I think the role of NSF, that one I will take because that will tie to Cham, and then Charles in terms of engagement with the VFRON. And then Mr. Stevens, if you can tackle the idea of the 58 billion shilling, the suspense account, and then even the impact of the midterm in terms of what they believe is squandered. Okay, so I'll start with Cham. Cham raises shouldn't NSSF play a more strategic role within the economy? Let me begin by what I call our promise to the members. We have got 3 value propositions to our members. The first one is safety. And safety has 2 components. That when you are eligible for your money will be there. 2, the value of that money will not be eroded. So we always make sure that we protect your money from inflation. That is the value proposition we've given you to the members. That defines exactly what we determine to engage in. The first question is the members' money going to be safe? Because when you think about it, that's actually our mandate, that we have to do it that way. It informs what you're going to get into, what business you can look at, because you assess it in that. Now, some people say, okay, just open it up and go to everything that you need to do. You can't when you have that mandate. You have to be very selective, because that is a promise to your members. But then you raise the question, should we play a more strategic role? The answer is yes, we should, and we are. Not maybe where you are seeing us bailing out businesses. You may not see a lot of that happening. But in terms of beginning to grow businesses, being impactful, I'll give you an example. Just over the last 2 years, we have funded about 157 startups. And we did it not alone. We brought in partners to do that because therein lies the hope for employment and jobs. Globally, 80% of jobs are created by small and growing businesses. So if we get in there, we are able then to kind of shape how this business is going to look like. So you're going to see us getting into that because we cannot reach our numbers using the traditional ways. Whether it is agriculture, we talk about agriculture. My own thing is the biggest problem in agriculture is not that the farmers don't know what they're doing. We've thrown in NADS, we've thrown OWC, now we're throwing PDM at the farmer. Fundamentally, we are thinking that agriculture's problem is 100% the farmer. What we forget is the farmer actually plants and grows. When he harvests, he asks a question, where am I going to sell? And we have no answer to that question because we've never, as a country, addressed the demand side of agriculture. And in doing so, we've actually violated a major economic principle that we've always thought that supply drives demand, when it's really the other way around. Demand drives supply. So we want to intervene on the market side so that when the farmer begins to grow, he knows where he's going to sell it to, he knows the price, so that we take away this uncertainty in the marketplace. And by the way you do that, you'll drive productivity in agriculture. So you're going to see us involved in those strategic areas because they sustain us. If we can bring 7 million farmers, okay, if there are 7 million households, if we can bring half of those over the next 10 years to save with a fund, that's a major impact when we do that. That's a strategic thrust that you'll see us going through that. Sometimes misunderstood, but happens. Samuel raises a question about structure. Are we structured for this growth? I think, Samuel, you'll agree with me that in his strategy, it says that structure follows strategy. Once you have a clear strategy, you then tweak, change your structure to meet that, and we've done that. Even internally, we are changing the responses, structure and the responsiveness we need, because we know that for you to address the needs of the farmer, it's going to be very different from the way you address the needs of New Vision Group, a formal employer. So yes, since we have a clear strategy, the structure is following up on that. The last one that I think I'll answer on that will be on the public outcry, misuse of funds. Are there things that we are changing? Please don't fall into the mistake a lot of people did. They looked at NSSF as a consumptive entity. Said you paid bonuses. They never stopped to ask the question, what was the value generated? So I'm going to answer that question, looking at both the expense and the value. I just showed you a number that last year, our cost-income ratio was 11%. In other words, for each shilling we generated in revenues, we're spending 11 shillings in costs. I also told you that that number this year is 9 shillings, which means we'll become even more efficient on how we do it. I gave you a comparative with other entities. So if you take it in totality, the best example, I'm going to give you a very localized example. Last year, our budget was we spent about 180, 190, say 200 billion shillings. The value we generated, we collected 1.7 trillion shillings for our members. Generated realized income of 2.2 trillion shillings. Just between those two numbers, generated a value of almost 3 trillion shillings. We spent 200 billion shillings. It is like at the beginning of the year, you as a member gave us 200 billion shillings, say, go work for me. And we went and worked for you and generated 3 trillion shillings. That's almost 15 times the amount of cost you gave me. When you look at it in that way, this fund is amazingly efficient. Because those numbers, you're not going to find it in Kenya, in Tanzania, and yet we normally think of Kenya as being better workers than us. And the NSSF worker can generate 15 times value for his member. The Kenyan generates around 8 times. Tanzania is even worse, 3 times. What makes a Ugandan NSSF worker that good? Maybe some of these things that are looked in isolation is what makes a Ugandan NSSF member, NSSF staff member, work that good for you. So you look at it in totality, and you'll understand that we have a gem in this country called NSSF. Thank you.
Thank you so much, Patrick, and thank you for the questions. I know Patrick has answered the question of Chamu, but I think I need to add a little bit. I need to add to it a different dimension. Sorry. I think it is true, to build on from what Patrick has said, that we are already participating in the local economy. I'll give examples. You notice for a company like Uganda Clays, the fund owns 32%, 32.5%. New Vision, the fund owns over 20% of that company. But the reality is that they are small. But for me, there's a story which is not known very well by the public. In 2017, together with the European Union, the fund started what we call the Yield Fund. This was a fund, a private equity fund, that was offering a private sector, or is offering a private sector solution to agriculture. That fund had an amount of 18 million euros, which if you convert it today in Uganda shillings is about 73 billion. To date, that fund is fully invested. It has invested in 15 different small and medium-sized agricultural companies, from soybean, coffee, dairy production, poultry. I can go on and on. These are 15 different companies that are focusing on agriculture, that are actually employing Ugandans. But the reality is that because our economy is smaller than some of our neighbors, even when you participate to that extent and the impact is great, the overall impact on your performance is small. Now, Patrick's presentation, in his presentation, he told you that we closed the year with assets under management of 18.6 trillion. That means that 1% of that is 186.7 billion. Now, if you're going to improve the diversification, of this fund by 1 percentage point, it means that you have to be able to deploy more than 200 billion. That 1%, the 186 billion, is the 15 companies for the Yield Fund. It has Uganda Clays, it has New Vision, it has so many other smaller entities. I can go on and on, but I think you get the picture. Again, Patrick mentioned in his presentation that the savings as a percentage of GDP is about 11%. And yet the fund is the largest single investor on the stock exchange. Someone mentioned an IPO where the fund invested $100 million. Yes, when the opportunity came and it was great, the fund went into that extent. Actually, that investment was higher than even the investment the fund made in Safaricom. I'm sure you're getting where I'm coming from. So the issue is we are participating in the economy and we will continue to do so. Our participation in the region shall never be more than 40%. In fact, we have a cap of 37%. The extent to which we can be in the region is not more than 37%. But guess what? Because we've been in the region to that small extent that we have been, and because we've taken advantage of opportunities that are profitable to members, that explains the very good interest we've been giving over the years. Now, the US, which we like to look up to, the pension fund assets as a percentage of GDP are more than 100%. But guess what? No US pension fund or asset manager has 100% allocation to the US. Because guess what? Today, the US is not growing more than 2%. Yet Asia and Sub-Saharan Africa are growing at more than 5%. I think I can go on and on, but I think you get the picture, Cham. And I'm more than happy to engage maybe privately, because I know that is something that is passionate, you are passionate about. But for me, the notion that because the fund is doing what it is doing at the moment, it is not visible in the local economy, I think for me, it's probably a question of misunderstanding, but the reality is that we are very much present. Today, if there's an auction at Bank of Uganda, that auction cannot be fully subscribed without the fund participating. Yet, when you look at some of our neighbors, the banks are so big enough in Kenya that they can take up the entire auction, and the market will, will be able to not feel the non-participation of the local pension funds. So I wanted to add that dimension to what Patrick has added. So Uganda clays. Yes, Uganda clays, we have made some improvements. It went through a bad patch. The fund supported the restructuring of that particular company, and it has a new management team. So we believe that going forward, the situation is going to be better, to your question. We believe that even when we saw a profit warning this particular year regarding their performance, these are issues that came as a result of the disruption in the supply chain, which affected the expansion program of that particular company. But we're happy with management. We believe it is the time that should be turning a corner. But because it's a listed company, I cannot divulge more than that, but I'm sure I've answered the question. Let me see. Oh yeah, Bloomberg. Yeah, Fred Ojambo. Thank you for the question. The irony is that on one hand, I was defending our participation in Uganda, and now I have to make a pitch for allowing us to go beyond the East African region. So you're right. You're right that by being restricted to the East African region, it has a big impact on our performance. Because there's something called in the investment world, the prudent investor rule. All investment professionals are required to diversify because the concept of diversification is well tried and tested. Rarely do you find asset classes or countries performing well all the time. And by you putting money in different places, you minimize the risk while at the same time improving the return. When you look at some of these unicorns, they actually had IPOs at the time when the fund had been, recently, not more than 20 years ago. We should, if the fund was allowed perhaps to take advantage of such opportunities, when those unicorns were coming to the market for the first time in the US, you can imagine what those returns would have been. But I think, yes, you're right. There is merit in having a small, not 100% allocation to regions beyond East Africa. In fact, I can even tell you that there are even countries where the pension funds have been allowed to invest 100% outside of their own countries. There are countries like Norway, and I think Netherlands to a great extent. Namibia is another good example where a big chunk of the Namibian pension fund assets are invested in the South African Stock Exchange, but the two countries are almost similar. But the reason why that is the case is because when you compare South Africa to Namibia, South Africa has bigger and more, mature capital markets. I think I'll stop there. Yes, the strategic asset allocation range for equities. Currently, we ended the year at 12.51%, you're right. That was the presentation. The optimal limit that we have for equity is 17.5, but although that is the optimal limit, we have a range, a maximum of about 20% and a minimum of about 12%. So we're within the range. Thanks.
Thank you very much, Patrick. I start with a question, Mr. Samuel Sanya, apologies if I have not pronounced your name rightly. But if we are doing the right thing when it comes to uncollected contributions, which you call suspense. Now, this problem has it is two-pronged. We have what we call the structural historical problem and then the behavioral problem. So if you look at the historical problem, we have had cases where a company a long time ago paid for 10 employees. They went to NSSF, say paid 1, 2, 3 million shillings without giving us any names, and then 2 years down the line that company closes. Now, it becomes very, very difficult because you can no longer trace the principals. neither are the people who were in that company able to provide you with that documentation to prove that they worked in that company. So we go a long way to grapple with that, go back to through URSB and whatever. That's a long, long process, but we are handling. Second, then we have what we call the behavioral problem. Now, we all know that the primary document in Uganda now for identification is the national ID. Now, to register with NSSF, you have to have a national ID. Because if you don't have a national ID, we cannot prove that you are a citizen. That's the law, and we are a law-abiding institution. Now, we have quite a number of these people who are working in the tea estate. Number one, who are non-citizens. They come during the season, they cross, say, from the Congo, Southern Sudan. They are target workers. They come to earn their money and they go. They are not interested in registering for Ugandan citizenship or even NSSF. But the law still requires that that company has to deduct the 10% and 5% from them and contribute to the 10%. So remit 15% to NSSF. So we get into a catch-22 situation. These guys have come, worked and gone, and we have got the money. Then we have another group, which are Ugandans. My father used to work in the tea estate. His number was XXYZ. When I come, I don't want to register. I just want to use my father's name to work. I work under my father's name, and I'm paid. Now, my father, along that time, either retires or passes on, and then we have this money, Mr. Patrick Ayota's money, who's passed on, but actually it was worked for by his son, who can't come and claim it because he has passed on. And have we made overtures? So we have done several overtures. We've gone to these industries and whatever, and in collaboration with NIRA, and set up camps to request people, please come and register for your national ID. And guess what? You set up camp the whole day, a whole week, and they don't turn up. So yes, this situation is with us, but we are doing so many other things. So one of the things we are doing is that now we are not enabling companies to send us money when they have not fully populated the schedule, the name, age, all the aspects. The companies have to take responsibility. So we are cutting down this number. This number used to be over 100 billion shillings. And this 58 billion shillings you are talking about is actually a point in time. Because normally, if the finance people will tell you when you close the year, there's always that number which drags on the other side. But if it's a 30th June, we close the financial year. There will be contributions which we have received, and we have not yet finalized the processing. Now, when you come on 2nd July, that number won't be 58 billion, it will be 28 billion because we would have processed it. So that's how it is, and we are doing quite a bit with it. Then the second question was about Mr. Mulondo, talking about the midterm and whether we are just letting these people go out there with lots of money and we are not helping them. NSSF is doing quite a lot. We have a for example, financial literacy program. Now, we started that program 1 or 2 years before COVID, and we are holding financial literacy classes. We advertise all over the media. We used your media houses. And people that time were coming to Kampala holding this class. We had people coming from all over the country. So when COVID struck, we took it online. We used to have classes of around 300, 400 people coming every weekend. The last cohort we had online was over 3,000 people. And we carry these cohorts we have 3 cohorts in a year. And now the cohort we have running now is over 4,000 persons. We are doing quite a lot. Now, the other most interesting thing is that all our staff were front-facing, and all the other back office staff, we are training them into financial literacy. So every staff of NSSF becomes a financial literacy advisor. So every time you walk to me, to Barbara, to anybody, we are able to give you financial advice. That's how we are doing. Lastly, there was a question, I think it was from Mr. Charles Boji, and asking about how are we utilizing stakeholders, other stakeholders, to run our business. If I am to give you the list of stakeholders that NSSF is working with, chicken will have to come back home to roost. But let me give you a few. We are working with NITA for obvious reasons. We are having with URA, we are working with NITA, we are working with URSB, and with all these we have memorandums of understanding. We're working with the Ministry of Gender, Ministry of ICT, we've got Uganda Police, we've got MTN, we have got Celtel, we've got media houses, everything. So you are going to ask, what do we, for example, do with Uganda Police? We had a very, very big problem with security companies not registering their employees and for NSS and paying for them. Now, if you notice, the key ingredient before you are given a license to operate as a security provider, you have to have NSSF compliance. And every month you have to go back to Uganda Police and prove. We are working with the procurement PPDA. We realized that quite a number, 60% of the contractors, like road constructions, we are not getting their people on road, the people you see working on the roads. Now we are working those. So we continue engaging every other organization or institution which will increase the compliance. So that takes us back to the other question of 50%. Are we doing? What are we doing? And these are some of the things we are doing. And we are going to drive this compliance up, and we are going to improve the financial literacy rates so that all our members are happy and comfortable. Thank you.
There was a question on the engagement therefore and the construction.
Yeah, I had skipped the question of Charles. The level of engagement with CMA for alternative vehicles to improve our investment options. Yes, it is true we are engaging. In fact, as recent as this week, we've been engaging with the Capital Markets Authority to explore our options to improve the options available for investment for the betterment of the member return. Now, there was another question from Mr. Musinguzi, Africa Report, Infrastructure. For me, I think the question is, how can the fund participate in infrastructure as an asset class? There are several ways, directly by co-investing either alone or co-investing with others. There's a second option of public-private partnerships. Then there are infrastructure bonds. The engagement is happening with Minister of Finance for issuance of infrastructure bonds, just like we've seen in some countries like Kenya, and the fund is actually very keen, and we've been a driver in these sort of discussions. We've also been ready, I think more than 5 years ready, to participate in public-private partnerships, to undertake infrastructure investments in investments like roads. Ginger Express Highway comes to my mind. Unfortunately, those discussions are still ongoing. And whenever the structure is ready, do not be surprised if the fund participates. Thank you.
Okay. Barbara, just a couple of things. I needed to mention a bit about the unidentified funds that we have. And I think by July, that number had dropped around 28 billion just because that was a timing thing. However, one of the things we have to realize is the NSF Act made a provision and recognized there would always be unidentified funds. By the way, most pension funds do. It has also prescribed how to handle that and how to treat it. So the issue should not be, is it there? Are you treating it right? Two things. At 28 billion shillings, that unallocated fund is about 0.035% of the total member fund, which means 99.6% of the collections we contribute have been allocated. And that number, when you compare our pension fund with others, they would not even be concerned with it, with us here. It says once you figure out and say you cannot identify this person anyway, put that money in a reserve. Now, each year when we declare interest, not only do we put interest on your active member balance, we put that interest also on the amount in reserves, just in case the grandson one day shows up and says, my dad used to work here, and he has enough documentation. There's a process in which you move that money from the reserves now to his account, and you pay him. Because in NSSF, it doesn't matter. By the way, whatever you believe, you cannot lose your money in NSSF. It will always be there, generation after generation. Hoping one day somebody shows up, I can prove their fathers, their grandfathers worked for it. Thank you.
Okay, thank you so much. Let's have the next round of questions. We'll have the last round of questions. Yes, please.
Okay, good morning. Martin Luther. My name is Martin Luther, the Nation Media Group. Martin Luther from Monitor. So, some questions here to most of you. When I looked at the presentation, and so many things come in my mind. And I would start with the decline in the equity. I know in the past years we used to have it at 15, today I'm seeing it at 12%. Was it intentional to drop it there? When I look at the fixed income, the real estate, it was something like 7, now it has gone to 9. Has it become more profitable for the fund to venture in that? Now I go beyond that. When I look at what you did talk about the challenges in Kenya, which is very clear, no doubt. But maybe the question is, what are we doing in other three countries? What are you investing in Tanzania, in Rwanda, and I think those are the two countries I think I was meaning. What are you investing in there really? Is it equity? Is it treasury bonds? What is it? I come back and again I look at it, all the operations of the fund, and I see it looks like the balance sheet looks to be very nice, growing, but what do you see as the key risk to your different investments in all the investments that you do? I mean in all projects, or what I could say the investment securities or investment instrument. In fact, the right word is the investment instruments that exist. Then I go ahead and ask you a question again. I remember during that probe, and maybe as a follow-up in the report, there were some kind of talks that the certain projects should be halted. I want to know what is happening. Are all these projects functioning, or there are some projects that you have put on hold due to certain things? And when you look at when we come back home here again, when you look at the environment, you did talk about the inflation and then the exchange rate. Yes, I think the exchange rate still somehow, and then the inflation, they're not really very, very stable in a way. So how does that really affect your allocation in different investments? Is it a risk really? Does it disturb you? Patrick, I was eager to hear something. What really drove your growth? It didn't come out really very nice for me. I was looking at it, listening to it. What really drove your investment? Your asset growth, really? Maybe I missed it. You said it, yes, but looks like I was not picking it in the way I would have picked it. What really drove your growth during this time And why is it that there is a lot of confidence? Did the probe have any impact on the NSSF investments in any way? I think I can stop there.
Okay, Martin Luther, those are 6 questions. I think that marks the end of the question and answer session. For the rest, we shall continue to engage. We will have to just take that and then close this. Thank you.
I think I'll answer his last question, then turn it over to Gerald, the expert on our growth. If you recall, I told you that we grew our contributions from 1.49 to 1.7 trillion. So there was growth in contributions. We also grew our realized income from 1.9 to 2.2 trillion. Those were very contributory in terms of that. So the details basically, and I mentioned that in terms of where those growth came from. So just the investment loans.
Thank you, Patrick. I think Martin Luther is right to observe that the equity allocation came off. It used to be 15. Actually, it was 15 last year. Now it is 12.51. The reason is because the market valuation have come off. As you saw in Patrick's presentation, for the local companies listed on the stock exchange, the decline on the Uganda Securities Exchange local index was 11.47%. In Kenya, the decline for the Nairobi Securities Exchange local index, all share index was 14.04%. Then we saw the Dar es Salaam Stock Exchange decline by 4.04%. And then we also saw the Rwanda Stock Exchange also decline. So largely what you're seeing is a decline first on the prices, but then also the fact that the Uganda shilling appreciated against those currencies, which means that when we convert them back to Uganda shillings, there is a devaluation. So that is why you see that the allocation kind of reduced from 15%, what it was last year, to 12.51. It's not that we sold anything. Actually, we bought more, only that the valuation kind of brought it down. So that is on the equities market. When it comes to real estate, again, you're right to observe that the allocation increased from 7% or thereabout to 9%. That was largely on account of the Lower Solana housing project, which has since been completed, and those houses are on sale. So our strategy for real estate is largely to convert, undeveloped land into projects which we can sell and realize the cash. We reckon that when we sell those houses, you should see the allocation to real estate reduce. In fact, our optimal level for real estate is 5%. It's 7.5%, but we have a range of between 5% to 10%. That is our play for the real estate asset class. Now, the challenges in Kenya, what we have in the other markets like Rwanda and Tanzania, we have participated in those markets as well, through government bonds and investments in companies. In Tanzania, we have a big allocation to fixed income. They have bonds. Actually, bonds in Tanzania of more than 2 years are actually tax-free, and we take advantage of that, again, to bring the effective tax to the member down. But we've also invested in the blue chips of that particular market. But again, what we saw last year, the market as a whole came down, and in fact, even on the fixed income side, the yields in Tanzania reduced from about 14% last year to 12% by the time we closed the year. On the issue of risks, yes, when you invest, you accept to take certain risks. The biggest exposure we have for the entire portfolio is the level of interest rates, because the biggest allocation is fixed income at over 78%. So when interest rates change, our performance also change, either positively or negatively, depending on the market situation. But then we also have other specific risks like, credit risk, because some of we've invested in some, corporate bonds. 2 years ago we had the investment in Kakira bond, so there's a bit of exposure to credit risk. But then, because we are investing in fixed income, even the sovereigns, our countries are not AAA rated, so there's a bit of an element of credit risk, again, as an exposure to the portfolio. We also have commodity risks because, again, we are an agricultural country. We export, most of our exports come from exporting, agricultural commodities. And again, depending on the impact of the movement in the prices globally, the fortunes of the growth of the economy can be affected. So there is an impact on commodity risk as well. So those are the three largest exposures that I can give you. But largely there are 6, but I'll stop at 3 because I don't want to make it academic.
In terms of the projects, all the projects are running, so nothing is halted. FX allocation, there's something, markets will go up and down. Because we are long-term investors, you assess the fundamentals relating to that company or relating to the country. If the fundamentals are still strong, you don't rush to reallocate. You stay, because whatever goes down eventually will come back up. And that assessment is critical. That's why you don't panic simply because the stock market crash. Kenya is a temporary situation according to our assessment. Thank you.
Thank you so much. Thanks to all of you. You've really been a very, very engaging audience. Thank you so much. We now need to let Patrick leave. He has another engagement. However, the right-hand man and left-hand man they're staying on. So let's just give Patrick just a few seconds to leave, and then we continue with the Luganda version. The good thing, Gerald is very fluent in Luganda, and Stevens as well. So we'll take on the Luganda version. Thank you so much, Patrick. A round of applause as he goes. Thank you. Just for the context, Mr. Mwanje, Mr.
It's a new day at the Fend. A new chapter is unfolding. With renewed ambition, unwavering passion, and an unyielding sense of purpose, we are driven by a newborn spirit to serve not just you, but everyone and anyone who seeks a better life. Together, we're forging a realm of new possibilities. Vision 2035 is clear.
Join us for the 11th NSSF Annual Members Meeting happening on the 26th of September 2023, starting at 9 a.m. live on TV and online. Visit www.nsfug.org/AMM 2023 to register your attendance. NSSF, a better life.